Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome, Auvorians, to the Saturday call. Today's the 28th of August. My name is Steve Vetterl. I am the firm's CMA. I try to act in a risk management capacity, so I highly encourage all of you guys to join the call on Saturday and Tuesday, 10 a.m. Pacific time. So oftentimes the big AP Builders call hosted by Matt and the team will run late. We have the Zooms that are going to be migrating over to the Market Watch community, which I'm actually just logged in. So if you guys are looking at my screen right now, let me maximize this here. So if you're looking, this is AP Social. I usually start off with the news feed, and you're going to begin to see all of my posts in here. So we'll do them in Telegram for a little while. But essentially, we want to get everybody migrated over to AP Social and get everybody completely off of Telegram, Zoom, YouTube, Vimeo, all that stuff that we're relying on all these outside sources, all migrated into one. Okay, so from a risk management standpoint, this is going to help you guys stay a lot more plugged into things that Brian's talking about, the Arrow team, other of our trade room folks. Certainly with Al, so I would encourage you guys to get in here, start clicking on people's names, friend them, get connected, make the community out there and essentially bountiful, just like I hate giving Zuckerberg credit because I don't use Facebook, but this is as simple to use as Facebook. So here's the AP Live tab. Everybody that is either a developer and or coaches, trade room teams, they're going to have their own channel in here. So in Market Watch, we need to adjust this around for some different stuff. But eventually when this gets all ironed out, I'll be able to broadcast directly through AP Social, which is cool. I hope it offers the same flexibility as Zoom. I've been assured it does. But as everything, it is, moving to such a huge position as swinging over to our completely own private platform, which I think is phenomenal. It does come with some areas to iron out. So have some patience on that. So you got groups, pages, here's the dashboard, where you log in. If you guys have ever seen a link to any of this stuff, but just trying to give you a feed for it. Most important thing, in my opinion, right here, take out the news feed. It'll give you an opportunity, especially if you haven't seen some of the trade channels, just to see what the educators are talking about. So there's posts in here from everybody, including myself. So you'll start to see more posts coming in here. I'm actually going to do the back office post first in here with my normal notes sheet that gets posted. So I sort of have to find a place to make sure we can get that connected in here live to the Market Watch community, which essentially is right here. So our the Auvoria Prime, as the community grows, and as we get more people on the platform, I think this will just be a fantastic tool from a risk management standpoint. Okay, but we can't leave all the other channels and stuff just yet, because we've got to get all the stuff ironed out. So there will be some duplication for a little while. As even yours truly, who consider myself a pretty high-tech person, I mean, I'm going to have to get my profile finished and, go in there. But make sure you go in, build a community. It's really all about the community, right? The bigger the community, the more the community has a vested interest in, putting out just alerts on just different stuff, the better we're all going to be at trading, the more money we're going to make. So at the end of the day, it's really the bottom line. So with that being said, we're going to talk a little bit about some risk in relation to I'm just setting up a MyFX book. I continue. This is the biggest area I get the most questions about, in addition to just what's going on with a particular currency pair. These are the two areas that I get most of the questions surrounding. So let me just drop this in the room. So I think everybody, so this is coming in the chat room right now. Everybody from a risk management standpoint, this is top 5 on my list, in my opinion, as to what you can do to best be able to analyze your trading. Make sure you get it double verified, just like you see right here on this next screen, as far as track records. So let's go into the news for next week. As you may have heard me screaming from the mountaintops over the last week, we had the Big Jackson Hole Symposium, which there was all types of different opinions as to what's coming out of Chairman Powell and his team, and they're continuing to push the transitory theme as far as inflation, which essentially is just a sophisticated word for saying that it's only in certain sectors and it more than likely will subside, which I actually disagree with, but I could be wrong. The Tommy Thornton, one of my good friends, a big trader in New York, used to work for Millennium Capital, which is a big hedge fund. He actually owns his own service now, research company. It's called Hedge Fund Telemetry. He actually posted a fantastic piece, which I asked if I could repost. So I'm actually going to drop that in Telegram a little later today. A little more of a deeper dive on Federal Reserve activities as it relates to monetary and money supply and quantitative evenings. But if you want to have an idea and a little bit of just a broader understanding of how central bank operations take place from the standpoint of concerns that Tommy has with how the Fed is handling this. And it really is the same theme most macro analysts globally have about central banks. And that's really just the standpoint that they're getting all the respective countries in too much debt, right? There's just too much easy money flowing around. That's why different asset classes across almost this entire planet in developed markets have just been, in some cases, just raced up in value, including the equity markets. So there's a lot of bubbleishness going on. Many of us of the conservative nature feel like the markets need a breather. We need a pullback, or else, the worse it gets and the bigger the bubble gets, the larger the pop. And that's something we don't want to see. We don't want to see a 1929-ish as far as recessions globally, mostly in the US, and or a 2008 financial crisis. So with that being said, the link's in there. I'll begin to post the Forex Factory for the question that just popped up. All you have to do is click on this, get rid of what I consider to be low impact events on the market. I only care about the red folder events. Just click apply. Make sure you also pay attention to the time zone in these times right here. So this coming week, if you are trading oil, I would highly suggest that you put a curtail on it on Wednesday, because these OPEC meetings, I can't say what's going to happen one way or the other. OPEC always seems to have their own crazy ass agendas, and you got to be aware of that. Outside of that, manufacturing should be interesting, but what's most important is what's called non-farm payrolls. They've changed the wording here a little bit, but essentially it's called an NFP report. It is one of the largest that is disseminated. It comes out at 8:30 New York time on Friday, typically the first Friday of the month, as many other countries release their reports as well. So this one's a game changer, just like I said, for most events. Ideally, in a perfect world, all of our EAs would completely stop trading, maybe an hour before, a couple hours after, right? And or manually, we know that a lot of our trading coaches will not trade in front of red folder events. So just be aware of those. So we jump into the marketplace, talking about individual stuff. If you got any questions, the Q&A window is open. Feel free to post your questions about particular currencies. I've talked a lot about these over the last few Saturdays. Not much has changed. So let's just go through a quick zoom from a daily perspective. Daily charts only. Each candle represents a single day. And we'll rip through these. So dollar, as I had mentioned when we got up to this point, it's considered to be a fairly big resistance. Since then, we were actually one time framing down for a couple of days. And now we sort of leveled out at some moving averages that we're hitting, but still pretty big down day on Friday. So if you look at all the other currencies, and I'm not going to do the FinViz screen, but it's just sort of a comparison of the correlations between the movements. Obviously, when dollar goes down, most other stuff related to it goes up. So we saw a lift in the euro coming off what I consider to be the edge of the cliff down here at this 1675 area. GBP, same thing, but we're still in a tight zone on the daily. So nothing's broken out one way or the other, in my opinion, on that. US CADs, as you can see, it's been a lot more volatile recently. Do note that if you will have EAs automatically trading and or some sort of MAV where you get approved the trades, many developers have turned off CAD related pairs. So if that's brand new news to you, you need to go and listen to the developer news. Yeah, I guess the news, but their weekly calls will give you the background on all that. I had not had a chance this week to attend any of those calls. So I don't really know what they were talking about, but that's been a consistent theme we've had since some of the volatility has showed up with these CAD pairs. But you can see, though, even though we had that, what I consider to be a hammer reversal here on the 20th of August, which was about 8 days ago, we're still back inside a tight range. So support down here at this 2440-ish area. And then obviously our huge resistance up here just under the century mark here, 1.3. USD JPY stuck in a tight range. USD CHF, again, stuck in a tight range. A little more of a protracted move on Friday here. Yesterday, AUD. Now notice the reversal this is. Now, no surprise, right? This is almost the opposite of the DXY, right? So as the DXY has been pulling back, this has been lifting up. But notice some of these moves have been a little bit bigger on this lift. So it's been a little more of an exaggerated move to the upside off of what I was considering to be sort of the edge of the cliff down here at this 7100-ish area. Take a look at the weekly on this. Pretty big reversal. No surprise. It's the opposite of the dollar. CAD CHF, again, more volatility in here associated with. Another great example of why this Bollinger Bands, which is sort of these outer bands you see here, have really nailed a lot of these stretch-based moves. For what it's worth as a manual trader, just outside of all of the other education you'll get from other educators, which is good stuff. What I always advocate is that extreme out moves you can actually take. It's the only time that I will step in front of the train is when we have just a really exaggerated move. It doesn't necessarily have to be in a daily time frame. It could be something small like an hour, a 240 time frame. But anytime you get outside of whatever your particular measure of a stretch is, right? Multiple standard deviation bars, Bollinger Bands, Keltner channels. I mean, whatever you guys want to call this stuff. The key is that when you have a stretched move, the rubber bands getting really stretched out, as I talk a lot about, those are trades you can actually take. Now, I would typically, in trades like this, just because there could be a crazier move, certainly in this pair that develops out of that, I'm typically about half size. CAD JPY. Weekly on this. Yeah, so there's your good, fairly solid support and resistance levels. All kinds of moving averages showing up in here as well. Euro GBP. Real tight range here. Tight range on the weekly. See, we've got exceptionally defined parameters of where we're moving between. So, David, the question you just asked me about trade in US 30, I seem to have been seeing a lot of this inside of some of the different chat rooms in Telegram, a lot in the Arrow. I guess at some point I'd like to know. I don't know. I guess we need full participation in this type of poll. Maybe I should put a poll out on it, but I'd like to know who's trading US 30. Happy to do more analysis on that if you guys want. I just, the problem I have and why I don't really show that is with, it's kind of like most clients, right? Remember, I deal with a lot of older, wealthier clients. A lot of these people are just in tune to watching the Dow Jones, right? Which is an inefficient and ineffective benchmark, right? So it's only 30 companies. It's not cap weighted, it's price weighted, right? So it's an ineffective benchmark in and of itself. Whereas the S&P 500 or the stocks index or, anything that, here, I'll show you the UK 100. These are all capitalization weighted indexes, meaning that each stock or each company that comprises whatever percentage component of it is based on a capitalization weight. Whereas US 30 and all the Dow Jones, which has been around since the early 20s in this country, is all price weighted, right? So it's in my opinion, it's an ineffective benchmark. And it is also not something that I ever trade against or benchmark against any client portfolios, right? We typically, for the equity portions of clients' accounts, will bench against the S&P. Or if it's some foreign index, we'll bench against EFA, which is one of Morgan Stanley's global ex-US equity benchmarks, okay? So I would encourage you guys, if you're going to trade, MT4 based currencies or pairs, trade the S&P or trade the NASDAQ because it's a broader base. Just a side note. I think there's more risk in 30 stocks that are ill weighted, right? IBM comes out with a fantastic report, right? Boom, or Intel, or one of the big names, Procter and Gamble, in that 30 list comes out with a great report. Their price moves tremendously. It has a much larger impact on the index than a capitalization weighted move. So if that's confusing to you, apologize. But it must be talked about because it is a measure of risk management. Back to the list here. GeoCAD, I want to make sure I show this one as well as our currency of the neoness. So here's Neo's trading. Bounced off of what's solid support. So hopefully Neo recognized that, and they were mostly long in chunks of their trades this week. I'm going to take a look at a 4-hour chart on this. See how good these Bollinger Bands are? Great stuff on a 4-hour. Look at that. These trades are almost gimmies. Past performance is no indication of the future, right? So never just take anything blindly based upon that. But I tell you, these custom Bollingers that were constructed for me by a big developer inside of PineScript, which is what the core of Trading Views writing is this guy's a man. GBP, Swiss. Wanted to show this. We've had a little bit bigger moves, slightly abnormal, but just showing the solidity of the resistance that's above this, right at that 2600-ish level. AUD can I show this? So we're coming along. Real big move. And this obviously surprising is the strength of the Australian, almost against every other currency recently. At least for the last week or so, we've been in a trend up move. AUD, NZD is something that slightly breaks from that, right? So if we go back and look at AUD USD, right? This is a big move. Let me just make sure we look at the daily. This was a big move off of a longer term support. So if we look at the weekly, look at the weekly on this, you can see this big moving average. It bounced right off that longer term number. which is the yellow line. A lot of the Aussie and the CAD-based pairs have been a little more volatile, so just remember that. So here's GBP NZD. Clear rejection from just under this century mark here. See that? With the daily. It's almost like it's ping-ponging between the big resistance areas on the weekly. And now we're at a big support area on the daily. It's crazy, huh? It's sort of a strange phenomenon. Occasionally you'll come across the technical analysis. See that right here? So just right under this 9600 area. Looking on the weekly. Rejection off it. Interesting. I'll tell you honestly, at this point going forward, anybody trading this manually, I mean, if we break below this line, I gotta believe there's going to be a big move. I don't know. And it would certainly argue, at least on the daily, if we got down to the bottom of the tip of this band here, which is this 9470-ish area, there'd be an argument for taking a shot at a long, but I'd probably be quarter size in that just because of the fact that there's probably a whole pocket of stops down here. Hard to tell where they're all aggregated, right? Where do they all sort of centralized? So, but I would expect a move down underneath this area to be a complete rejection reverse. And I'd want to be long. It's tough to say where at this point, but just keep an eye on that if you guys like manually trading this, which can be treacherous. The settings on the Bollinger Band, David, I do not disclose. Proprietary tool. Let's go back down to the Bitcoinage for some of the questions I got. So in this particular chart pattern, as you will always hear me happily admit to, I've been wrong. So my wife always jokes around, Steve, he actually admitted to being wrong something, which is rare. Let's write it down. But in this particular case, we've had a lot of positive stuff in relation to crypto, right? And it really all just evolves, I should say revolves around, it is sort of evolving to revolve around the fact that the more acceptance of crypto, okay? Now you'll notice, in addition to this chart, I've brought in number 4 crypto. So if you guys are not familiar with Cardano, here it is. So this one has come out of absolutely nowhere to really storm up the list. So now I don't hold a position in this. I have no position in any of these, by the way. Not to say that I wouldn't like to be positioned in any of them. I'm not going to be buying at this high level. I don't give a crap if this moves to 100K a coin, right? I would not in the least bit be concerned that I missed that. There is no fear of missing out in my brain. It does not exist. Because I always know there's always plenty of opportunities, and I'd rather buy at a lower valuation on anything. And this just applies, not necessarily in currency land, obviously, but whereas extreme moves in any currency pair, daily, weekly, 4-hour, some higher time frame like a monthly, which is more substantial. Those moves on extreme outs in the Bollinger Bands are always a much higher win rate. And it is one of the very few times that you will see me step in front of the freight train. So just know that applies to almost anything out there. But at the end of the day, if one wants to go long something, I don't care if it's real estate, art, classic cars, coin, right? Anything in any kind of DeFi or coin-based world, it's much better to buy these things at a better price. I don't think anybody disagree with that. But looking at the Bitcoinage, I'd be much more interested in purchasing down here around 20K, provided we spend a solid base, because this seems like the area where there'd be some real serious support beyond the support that we already see just under 30K a coin. All right, so hopefully I've answered most of these questions. Let's see. And one on gold, let's make sure we address that. Gold comes in two forms for the question I just got. This is the spot market, okay? So don't pay as much attention to the volume profile. In my opinion, I'd rather pay attention to the volume profile, the aggregated volume, if you will, on GLD, which is the big spiders gold trust, GLD, which just essentially just tracks the spot market for the most part. So you can look at the support we've had. Anything right? Let me just start with spot first. I can show you the bottom here. Anything that we've had as far as gold, it's been big support just under 1,700 an ounce. We've had a number of rejections. This one's a big rejection reverse off this just under the 1,700 level. So the buying area from a longer term perspective, in my opinion, would be that if we got down to this area, spent some time balancing, did not break below it, right? Remember, I don't just buy the first rips into these areas. I always want to see some sort of basing pattern develop. And then with the potential to break out to go higher, it's the single highest win rate, least risk, best time to go long. And then you can ride it back up. Same goes for any shorts to be placing. Essentially, this is your first area of pretty solid resistance right at 1900. Weekly chart brings a little more definition as far as the actual chart. This is one of the ones where a lot of the noise gets filtered out if you take a look at weekly charts. So you could do it for NASDAQ, S&P, you could do it for DAX. And in the end, here's the UK 100, obviously, here's DAX. Seeing how these charts look. If you look at the European index, stock 600, it's very similar to S&P 500 in terms of that capitalization weight in equities. So let's just back down before I get off on a tangent. So there's gold long term. Look at the daily again. Usually when there's a break, and it's difficult to say this for gold and oil and a couple other commodities that are more heavily traded, because these things can be much more manipulated, in my opinion, from algorithms, right? So there's very popular algorithms out there among probably about 20 plus hedge funds that dominate this market as far as institutional volume goes. Be companies like Bridgewater, so forth, that have built what's called a stop hunter algo, which really just goes out into the marketplace and just hunts for pockets of stops. So you're almost like a sitting duck. This is actually a big reason why in the futures markets, I'm not just sort of out there waving a flag. Hey, here's my stop, right? Because these hunter programs are just going to try and get you at some point. Not always the case, but there's times when these programs are on and running. You kind of want to be aware of sort of those factors. Always thought of to try to give a good analogy of this, but a lot of the analogies I've brought up in the past probably just confuse people. So just understand that you always want to be thinking about where pockets of stops are in anything, right? The more we've spent time in some sort of tight range, like right here as an example, let's say forget about all this stuff, but if we just spent some tight range, Euro GBP is another good example of that, where you're coiling, if you will, or you're just having a tight range. The tighter, the longer this goes, the more the breaks from this area, as you can kind of see here, just get exacerbated in the moves. Now, a lot of this particular move was based on some concerns about inflation and a couple of dissenting Fed governors and some of their talking, but essentially it's something you always want to be aware of. Let's take a look at DXY. I already showed this, didn't I? So for those late or anybody that's just asking about DXY, here is the daily, right? You always want to look at the long term on this stuff. Long term back to, in this case for the chart, all the way back to the spring of 20 during the pandemic. Here's the weekly chart. much longer term. Let's take a look at just the last 4 years. Gives you an idea for how much time we've actually spent in dollar land, between the very high, which is just under 104, to the edge of the cliff, in my opinion, which runs between this 90 area and 88. This whole $2 range is sort of the edge of the cliff, in my opinion. Haven't gotten down to this point, but if in fact this truly is a reversal, we're going to go back down, depending upon how the fall plays out. I don't know the magnitude, the depth, the length, any of that stuff. But the key is I personally believe, as David Hunter does, and Tommy Thornton, two guys you see me post a lot and retweet a lot of out there. Ultimately, think the dollar is going to go to this point. There's just too much debt in this country for us to stay in these price levels. The reason it's just up at this level in many long-term sort of unbiased macro analyst views, just because it is still looked at as much crap as we're in as a store of value in terms of globally. But ideally, it breaks this whole lower 88 area, and then it sails all the way to 85. This would probably be a pretty big move. Something you don't really want to ever step in front of, even though we'd be hitting Bollingers and we'd be crashing through all kinds of stuff. That's something that of that particular train I would never step in front of, even if I was wrong. I'd rather be riding the caboose, right? Riding the coattails of that move than trying to jump in front of it. All right, what else? I hope everybody on this call is going to make a concerted effort to make sure you are logged in and all set up on AP Live, because these Zoom calls are going to go away, which is being mandated by corporate. I actually applaud the move because it's going to force everybody onto a platform we own, which is killer. We control, and to be a lot more inclusive. So this ending last piece discussion, I'm going to talk a little about my FX book. What you're viewing here is a live account. You can tell that by looking at where it says real versus demo, a variable. This is the normal variable settings. Variables actually had a pretty decent last few months, so applaud Dasan with some tweaks. We've had periods of variable where Dasan's been working through a bunch of stuff, trying to get back that, in quotes, or in neon, the past killer variable performance, which has been about 10% a month. Now, do understand that this particular gentleman's account, he's running multiple currencies. So we're running, if you look at the summary, we're running a lot of different pairs, but a few of the CAD-based pairs have actually been removed or turned off here. So let's pay attention to what Dasan tells you is much more important than what I'm just sort of poking around here. But what I did want to bring up is that even in a verified, what I like to call double green check mark situation for either a live or demo account, many cases I found, and I don't understand why yet, nobody really else has an answer for this question, but the drawdown always seems to vary dramatically between brokers. And that's not saying one broker is better than the other or what have you, right? We don't condone, nor do we have any opinions of brokers, but yet we've done a lot, and so have I, on just making sure you are crystal clear on the difference between an A and B booking broker, right? You really prefer, in my opinion, a straight through process, or somebody that just executes and doesn't game against your algos, which is more B booking. So, there's about 6 or 7 brokers that the vast majority of our super plugged in builders at this company and or traders utilize. So it is not difficult finding out who those are. But as a company, we cannot talk about them one way or the other. So there is sort of like that, hey, here's the love list, but we can't publicly. And the reason really, if you think about it, is what if we went out and, publicly talked about a broker and then they, like certainly has happened in currency land. They just up and ran off with all their clients' accounts. Lawsuits would be flying back towards Auvoria, right? So just understand that from a risk standpoint, it's just not wise. So drawdowns can always vary, but the key thing, in my opinion, which we've seen a lot with Flash recently, as we're getting ready to go live with this, Flash will have a drawdown, and just like variable here, it comes out of it. I think it's just been surprising to us how fast it has come out of the drawdown. I mean, really good. So, the idea is and just keep in mind in advisor land among my clients, if a client that's got millions of dollars gets 10% annual on their money, they're absolutely peached. So looking at performance like this, which is just absolutely phenomenal, in my opinion, putting in the perspective of how investment performance globally, right? I mean, there's many hedge funds out there that charge 2 and 20% that run billions of dollars. And if they have a 9% return, many of their clients are absolutely peached, unless the market's done 20, right? Or whatever their benchmark that they're marked against, right? Does 20 because then they've underperformed. But, if the market did 7 that year and the fund generated 9%, it's what's called a 2% alpha. It's a performance above and beyond an accurately compared benchmark. So that being said, don't put all your money in currencies, obviously. It's all part of a diversified portfolio. As we are getting more and more smoothed out, if you will, and I'm becoming considerably more comfortable with this performance, we're going to begin to bring, just as soon as our broker sort of irons out the master account setups, which is called PAM and MAM accounts, we're going to begin to allocate some of our clients with our first down practice into some of these different EAs. So that is my presentation. Let me just peel through, make sure I got all this stuff answered. So I have no idea on when, for the question I just got, I have no idea when Flash is coming out. I do know that they are making solid progress at getting it integrated. I think there will always be some period of quote ironing things out in terms of software land, but things like this and all of the whole past full year track record of Variable and Neo, and it shows very good promise. There's always going to be periods of time, especially if you're not paying attention to what's going on, that developers are going to turn off and on currencies, and you want to be aware of that. What else? No, for the question I just got, Auvoria will not be offering PAM and MAM accounts. That's just broker specific stuff. And that's just a sophisticated acronym that allows a master account to trade lots of junior or whatever you like, smaller accounts at whatever Forex broker. It's a, it's not a perfect process, I wish, but I wish it's really the only way to have paying clients and be able to control the trades and the allocations in their accounts with some sort of master. Always be looking for the other question I got when you're looking at trades. Key is the win rate, right? I don't know if you guys saw any of the presentations we did. We were down in Orlando, but my discussion on the Holy Grail and trading really just evolved around percentage win rates, right? I mean, you could have a 40% win rate, which sounds really terrible, right? Or your algo could have a 40% win rate. But if you're not risking much, but you're letting sort of your runners run, you can still be profitable with that type of split. Now, ideally, you'd want to be higher, right? So some of the best traders out there are, 55, 60. I actually know a guy that's almost a 75% win rate, which is bananas. That's probably why he lives in a $9 million house in Florida. But at the same time, the key thing is just keep the win rates solid, or whatever you're analyzing its win rates. But just know that it doesn't have to be in the 70 or 80% or higher range. It can be as long as the losses as defined by drawdown or, just different metrics of um, profit factor here, which you can utilize. And keep in mind, you're looking at something that's only 4 months of data. Taking a longer term look at some live or demo account inside of my FX book on a much longer period of time will give a much greater big analysis in that. But at the very least, you want to be very concerned about large drawdowns, 70, 80, 100%. Those are ones that blow accounts. In many cases, the settings are something crazy, not what the developers are recommending. When you're analyzing, I always take a look at the profit factor. So if you've got a decent data set, in this case, I think we do, it's almost 2,000 trades. You could begin to look at what some of the biggest losses or some of the biggest gains were. So you could see the gains from just a grouping standpoint. Just looking, this is just a macro. See how the gains, some of the best, were almost 3 times some of the worst profits. I'm sorry, some of the biggest losses, worst profits. Gives us a different way of looking at it. You see the difference there? Okay, that's kind of the stuff from just at least a broad analysis you want to see. A lot more in gains, a lot less in losses. Simple math. You could go through all this and you highlight over something, you can see what it is, and they'll give you definitions. I don't spend as much time here. This was actually a big area in futures trading land that we used to spend time, just because I'm not sure how these guys are calculating this. But essentially maximum adverse excursion, which just means how bad a hit does it take, versus maximum favorable excursion is just how good does the trade do, right? Ideally, risk reward anything 3 to 1 or higher, as I talked about in my presentation, you would have very low adverse excursion, essentially taking what we used to call little heat, but then it will just take off from that point and move higher. Kind of like those outside Bollinger Band touch examples. One thing I've really been on the developers is to make sure that everybody's constantly looking, and many developers, to their credit, who in many of this type of analysis, much more in depth than I ever will be, which is good. They're running all kinds of constant analysis of which pairs have the highest win rates and which don't, right? And especially with volatility, or a group of new currencies that experience volatility like we see in some of the CAD and cents, or AUD-based pairs, you're going to remove those, at least for the time being. They're always analyzing, but take out the ones that are worse. But you can do some of that by just looking at this here yourself. Try not to pay as much attention to the performance as a lot of the other metrics I'm trying to show you guys how to use here. But you get good enough at this, you really will help yourself feel comfortable about, are you trading manually, accepting manual alerts from a more automated based system, or whatever the type of EA is that you're messing with, or for that matter, any other trading out there. There's different types of analysis. I think at some point I'm going to show the fund seeder system once I get access to it, which I've been granted institutional access to it. The fund seeder is an analysis of all of the best traders in the world in a futures markets. So I'm actually going to go in there and show you guys how that type of analysis can look on futures trades to give you sort of a different perspective for something other than a MyFX book. So these fund seeder guys, if you don't know who they are, it's Jack Schwager's company. He's one of the market wizards historically. So we'll look forward to all that. A question I got, sometimes I have clients look at the Sharpe ratio. Usually turned off by 0.10 and less Sharpe ratios. However, the P&L goes. Yeah, you could put all kinds of ratios on this stuff if you want. Now, just understand ratios, in my opinion, are better calculated on stocks, indices, and benchmarks. Okay, indices and benchmarks, kind of the same thing. But the key thing is and whether you're looking at a Sharpe ratio or a Sorrentino, there's all kinds of exotics out there in ratio land. You want to just, in my opinion, they're best applied to that. One of your best risk measures is, let me just close this part, is your profit factor here. This and the standard deviation in Sharpe. Okay. So Sharpe, you can't see this, it just says is used to characterize how well a return of an asset compensates the investor based on the risk taken. So the higher the value of the butter, right? So in this case, it's a 0.17. I don't have all the different EAs memorized, and obviously they're all based on what broker's executing the trades, what's the EA that you're using. So there's a lot of variables in that calculation. But if you want to, you can look across all the MyFX book links for a given EA, provided it's just standard settings, right? Like in this case, variable. But you can look at that and see what the Sharpe ratio is, right? Ideally, anything above about a 0.11 or a 0.12 is considered good. But the problem is you don't have anything to compare it to, right? So if you had said, well, what's the Sharpe ratio of the S&P 500, or what's the Sharpe ratio of a portfolio of individual equities, right, stocks? But then you'd compare it to what's the Sharpe ratio of the benchmark. So I'm kind of going down a rabbit hole here, and I'm probably going to lose a few people on this. But if you guys want to do a deeper dive on this down the road, probably a little more pertains to trading, ETFs or equities, in my opinion. All right, I got to take off here because I have a golf game. Continue to try and hone my rotten game. So I'll wish everybody a great Saturday. Thank you in advance for the patience. Although I blame it on corporate, not me. But I guess it's a good thing, right? When you get these calls that are all running late and everything, I mean, it's because there's tons of people want to get in the door and everybody's pumped. So, hey, I gotta love it. So hats off to Matt and Susan for kicking ass in that area. And I wish everybody a great week. May the trades be with you.